Top of the morning to you. Let me guess what you're gonna do today. You're gonna go downstairs, you're gonna sit at your desk, you're gonna trade the futures and probably lose, and then you're gonna switch over to options and try to do it weekly, hoping that you get your money back, only to lose that as well. And then you're gonna get so angry and frustrated, you can be like, you know what, I am gonna just swing stocks, and you're gonna buy some random, I don't know, shitty stock like Skills, and hope to swing it only for it to go down to $9. Hilarious. You're the only person I know that actually sits at a desk for 8 hours to lose money. Hey, I got a good joke. Ready for it? Why did the trader get electrocuted? Because he shorted Tesla. Hey, remember that time when you shorted Tesla and lost $1,500? God, you suck. You know what I'm gonna do today? I'm gonna work on a song. I'm working on a song and I'm gonna dedicate it to you, and it's called You Suck. You suck. You suck. You suck. Suck. Oh baby, you suck so bad. You're gonna sit in this chair and you're gonna lose a trade. Oh baby, you suck so bad. Have zero patience and you're gonna lose this trade. Oh baby, you. Oh baby, you suck so bad.
Order submitted.
You're gonna sit in this chair and you're gonna. What's up everybody, welcome to my channel. I am Mark and you are watching Trading with a Dummy, the educational entertainment channel. Hopefully you guys enjoyed that intro, because that is the reality of my brain. I'm not going to sit here and lie in front and act like it's not. That is literally what I deal with every single day. So today we are going to talk about the mindset. Mindset is really a hell of a tool. Some days it's your greatest asset, pushing you through days feeling good, and other days it's your worst enemy, feeding you the negative thoughts. There is a reason why there's so many self-help books that are out there and that are so popular, with titles such as How to Unfuck Yourself or 192 Pages of The Secret, which I may add could have been summarized on a single page. Positive thinking and the law of attraction. Congratulations, you just finished reading the book. Becoming proficient at trading and understanding the fundamentals and the technicals and charting and learning the different ways to extract money from the market is for the most part a pretty damn easy thing to learn. But you need the proper knowledge, and that's the key. Knowledge. Hell, you can buy shares in Apple, Microsoft, VOO, and QQQ and call it a day, and I can guarantee you that you will end the year in the positive. By the way, those were gems I just dropped. Oh, also, real quick disclaimer, I am not a financial advisor, neither are my kids that have no idea what they are saying majority of the time when they are performing. In order to make the best financial decision that suits your own needs, you need to conduct your own research and seek the advice of a licensed financial advisor, which I am not. This channel is specifically for entertainment and educational purposes only. Cool. We're done with that disclaimer. Alright. The hardest part about stepping into the ring of trading and investing is the ability to be able to be in the right state of mind. So without further ado, let's dive into 5 trading psychology issues I think you should be aware of. Now, I heard that YouTube does really well with food for some reason on the algorithm, so I thought to myself, why not make myself a sandwich, because I'm hungry right now while I'm talking to you guys. So hopefully this will work out as planned, and I don't have to do a bunch of different takes, because believe it or not, I actually do a bunch of different takes. So, let's get back into it. So you may not want to hear this, but there really is no easy way to say this, but becoming a successful trader or an investor overnight without taking the time to understand the fundamentals, it's not going to happen. I know, I said earlier that it was a lot easier said than done, and that it's really easy to trade, and that is true, but you're not going to be able to take a basketball, go into court and automatically think you're gonna make it into the NBA. No, you have to practice. You have to dedicate time and effort into practicing and becoming better, and you may have a chance later on. You may not make it into the NBA, but you may make it into Europe. See, if you don't have the confidence to go into a trade or investment, your mindset, you will likely hose yourself. And if you're unsure if you made the right move or not, things may go kind of bad for you. And it's not because of laws of attraction whatsoever. It's just the fact that you don't have any actual real conviction. That's why you see people trading the same companies over and over and over, because they are confident in that specific stock and they have conviction in it. Therefore, they're willing to trade it and swing it and invest into it. See, most important thing is when you lose, you take a hit to the ego. The more you lose, the less you feel like you are going to be able to be a successful trader. Look, for example, CCIV. I didn't know anything about that company. I made a trade based on erroneous information from a friend. I built up a little bit of FOMO because I noticed that the stock was going up and up and up, and I heard that CCIV was going to end up buying Lucid vehicles and then go public. And next thing you know, I bought into this company, I bought a bunch of shares, and within that very next day when it was announced that this looks gross. I don't know if this is even still, slimy. Ugh. So we're gonna act like that didn't happen, and I heard that T does pretty well on YouTube, so let's go with that. Anyways, what I was trying to say was that I invested into CCIV, which was Churchill Capital, and within the next day, once it was announced that they were acquired, the stock tumbled by $20 per share. Next thing you know, I lost money, and because of that, I deserve to get smacked. If you're wondering why I'm mixing cream with my tea, it's a European thing. It's basically called English tea. It's pretty good. Give it a try. Seriously, give it a try. Take chai tea, take some creamer, allow your tea bag to kind of sit there for about 3 minutes or so, then pour the creamer in, and there you go. It's really delicious. It's like flavor in your mouth. You know what I mean. Because I made such a bad move with the $20 per share that I lost off of CCIV, my confidence level was at zero. I had zero conviction, yet I entered into this trade. It made no sense. It was truly a dummy move. And I started to question my ability and my trading skills and wonder if I should even be trading or trying to do this as a full-time gig, let alone doing this channel if I'm still making ridiculous rookie moves like that. And then I realized,
What's wrong? Getting nervous that your YouTube channel won't do very well? You're never gonna get that 100K because you suck. You should probably go back to ESL. Learn English properly.
have you ever been in a trade that went in the right direction and all of a sudden it pulls back slightly and you freak out and you exit your position for a small loss or gain only for just go in your favor a few minutes later?
Yeah, duh. If you want this book, the Amazon link is below.
That's what's called a lack of patience. If you don't have patience, you won't allow things to play out, and that's one of the worst traits anyone can have. Some people know they are impatient and they're very good at it, such as Kiki from S2F. She doesn't have patience, and she's the only one I know that somehow is able to take that flaw and turn it into a superpower. But many of us don't know how to do that and don't have that same ability and end up losing money. Patience is always key, waiting for the perfect entry and exit. Treat it like being at a gun range. You focus on the red dot, you lift up your gun, you look through your sights, and you shoot and bullseye. Consider that profit. It's really always about sitting and waiting for the best opportunity. The problem is the lack of patience, which leads to FOMO. And I don't know how many times I had to submit it to FOMO myself, and every single time it backfires on me. Most recently for crypto. I knew it was gonna dip, but I just didn't know when, and it just kept going up and up and up. Everyone was profiting except me. So I got FOMO, and I didn't have patience to sit on my hands and just wait for the pullback, which no lie, I knew was gonna happen. The very next day when I finally jumped into crypto, it dropped 40 to 50%. And of course, I was pissed with myself. But this was a lesson learned. Even when the train leaves the station, there's always gonna be another train to pick you up later. Finding a trading strategy. Figuring out your strategy that is profitable and that works for you is key to your trading plan. The reason I keep emphasizing you is because you may meet a lot of people talking smack about other people's game, about their trading strategy. But the real truth is there are a ton of different strategies out there, and you just need to find which one works best for you. It's a trial and error process because you may fall into the trap of analysis paralysis because there's such a vast ocean of information readily available everywhere. But you need to figure out which one works best for you and ignore the rest of the noise. For the sanity of your trading process, you need to establish a level of a trading plan and rules that you cannot break that are non-negotiable. This is a psychological challenge because there will be times where you will believe there are opportunities for you to break a rule that you have established for yourself, and you will break that rule and get smacked right in the face for breaking it. Did that make sense? Let me give you an example. In the futures market, my tolerance for the NQ is slim. I don't trade NQ well, and honestly, it's burned my account to nearly zero. I kept seeing people killing it with the NQ, so I paid for a training session with a coach named Briscoe because she murders it with her method, and so I decided to let me see how she does it and figure it out. It just never clicked with me, and I broke that rule, and guess what? I got burned time after time after time. I kept losing money, and I didn't learn my lesson because I veered off of my trading plan and strategy. Accept the risk when entering into a trade or an investment. You probably heard this before. Never invest or trade where you cannot afford to lose. And I'm guilty of that, especially when I first started to trade. I took everything, and when I say everything, I mean everything. I put everything into the market like a crazy person because the truth is, I couldn't afford to lose any of the money. Luckily for me, things worked out for the most part. Watching channels like this or following financial gurus and coaches or being at an age where you feel you're behind the curve, you may feel like you need to invest everything into the market and basically hope that somehow you can flip it. Don't. Seriously, if you take anything from this video, do not risk anything you cannot afford, because if you rush into a trade, you will likely make some serious missteps that will cost you, literally cost you. And you could potentially develop bad habits like revenge trading. If you're unfamiliar with revenge trading, it's exactly what it means in the saying, revenge trading, because you are angry about losing your money, so you risk more money in hopes to recoup it just to lose more as well. God damn it. And number 5, last but not least, control your fear and greed. Profit is profit. Take it and be happy. You will barely ever get in at the all-time low and exit at the all-time high. So figure out where you want to enter and where you want to exit, especially for options, which can be less forgiving. If you haven't done so yet, I did a great video on how to get in a trade and out of a trade that takes away all the guesswork. If you click on this card right here or this one, whichever side it is, it's a card, it will take you to that video. Understand that stocks can run and your position may have a great opportunity to exit at a decent rate. Make sure you take it. During February through May's pullback, I allowed majority of my position to literally bleed out, and I never stopped the bleeding because I got greedy. I thought I knew enough to allow it to pull back and come back. Problem was that the pullback was much harsher than expected and my position became worthless, aka I lost a shit ton of money. And I know what I should have done, which is position myself to exit at a certain percentage if it would dip. For example, if I was up 150% on a position, set a stop limit to exit out at 130 if it dips 20% or something similar. It's not exactly something that I would do, but actually maybe I should have done that. Point blank is I allowed the greed to take all of my money, and because it hurts so bad, I've been in fear mode ever since. Constantly battling with my eternal self on whether or not I can make money and if I can do this as a full-time gig. But that guy over there is constantly telling me I can't. What did I do? Is wrong. Well, that was it, y'all. I will have a follow-up video here soon on some tips and tricks as well as some content to absorb to get out of your own head and manage your fear and greed. So until then, thank you for tuning in to the Dummy Zone. That might be it. Until next time, y'all, I am Mark and you are watching Trading with a Dummy. Dummy Zone.